Okay, guys. So I'm going to very briefly explain the concepts of support and resistance, which I've already explained in my lectures, and you should have known by now already. But again, for my satisfaction, I'm going to explain to you and how to implement them on your charts. And trust me, after this, you need to do it by yourself and send me the homework. Understand, guys? Say yes. Yes, good. Begin marking horizontal support and resistance on the daily time frame, and that's what I suggest to begin with. When you're marking your charts, daily time frame, the reason we do on the daily time frame is this: because institutions are looking at this time frame. This is the only least time frame the institutions see. Otherwise institution trade on weekly and monthly. Understand? So the smallest time frame the institution sees is the daily time frame, and that's why we mark support and resistance on this time frame. You understand, guys? Any questions? I explained you the first support and resistance horizontal, a support and resistance which is straight in line, which is no trend support and resistance. I'm explaining you how to mark on your charts, right, guys? First of all, you need to mark the point of reaction. This is all in the webinar. I'm quickly going through it. My satisfaction. Point of reaction. What is point of reaction, guys? The question is, what is the point of reaction? The point of reaction is market is moved by institutions, hedge funds, retail traders to a certain extent, a small market market makers. But then again, we mark only those points in the market where institutions comes in and move the market. So we want to mark those points where market had reacted, and that reaction is caused by the institutions, the market makers who moves the market. Understand, guys? Do you understand the point of reaction means? You need to understand the significance of level, why you're marking that level. Understand? Michael, say yes, right? Yes, please. Good. So what is point of reaction? Let me give you an example. This is a point of reaction. See, the market reacted to the upside, right? 690 pips. Remember, this move cannot be triggered by the retail trader, by a small hedge fund. It is an institutional move. Understand? This is a small move. That is by the retail traders. We call them weak holders. Weak holders. This is an institutional move. We call it strongholder movement. So we mark these levels. Simple. Understand? Then again, we mark this level. Why I mark this level? Because the market moved to the downside, significant 463 pips. Market moved to the upside, right? 400 pips. Significant levels. Market moved to the upside, right? 362 pips. Institutional move. Point of reaction. Here, market moved to the downside, reacted, and then reacted again. So, any questions? This is a point of reaction. Substantial. The downside. Can you see this? So any questions so far? Any questions? Only look for a significant move. Let me give you an example of significant move. This is not significant. That is significant. That is significant. That is significant. These small retracements are caused by the weak holders, not an institutional move. This is an institutional move to the upside. That is an institutional move to the downside. So do you guys understand? Any questions on this? The first support and resistance are the points in the market from where the market reacted. Institutions reacted. So if we mark those points as a reference, those are important levels to watch because institutions are watching those levels on their charts. So we want to trade with the institutions. So you understand not only just why we are marked, how to mark them on the charts, exactly know the reasoning behind it, the philosophy, the theory behind it. Understand? Any questions? Saiful, any questions? Good. The second kind of kind of support and resistance is this point of failures. This is the strongest is the point of reaction. The second strongest The second to the strongest is the point of failures. Normally, what does the point of failures means? The wicks only. You mark the wicks. Very simple. The main wicks within the market. Major wicks within the market. That's it. Wicks within the market. That's it. Nothing else. Wicks. What is wick representing? A failure by the participant. Let me give you example. What does it means? We mark the wick. What is meant by failure is this. Let me give you example. Sorry, guys. This is a better example. What does this wicks means? The sellers push the price down, buyers push the price up, and sellers failure. This is why this is a point of failure. It is a failure on the part of sellers, and that's why the wick has been established. Understand, this is seller's failure. This wick represents buyer failures. Buyer push the market up, sellers push the market down. This point is a point of failure. Understand, guys, the point of failure. Just wicks, we mark them on our chart. Significant wicks, that is it. Any questions? Say yes or no. Good. Now, question is, why do we mark wicks point of failures? I explain you, we mark point of reactions because those are institutional levels. They reacted from those levels. So we want to mark those levels on our charts to see where they're entering the market. But because those are the levels which they are watching. Now the point of failures, why they are significant. Now let me tell you this why. The market is a combination of human behavior. The market is moved by the human beings. In banks and institutions, it's all automated now. But remember, those automated software are established and generated by human beings. So market is based on human philosophy. The market movement is caused by the human behavior, by the human beings through their human emotions and behavior. Now remember, what is the human behavior? When we lose a fight, we always want to come back and refight it again, right? So when a market participant tried to push the market up, he failed at this point, he will always try, high probability to come back, regain that failure, and change it into a success. Look, the market failed here, the market went down. But again, buyers who fail at this stage somehow bring the market up and reach this level now. Can you see it? So this is why the point of failures are significant levels, and we should mark them on our charts because market participants, the big boys will always come back to these levels and try to aim to breach those levels again. Understand, guys? Do you understand the reason why we mark the point of failures and point of reaction? Any questions? Any questions? Okay, I'm going to give you an example how to mark point of failures and point of reaction, straight horizontal support and resistance, daily time frame. Exactly, this is the exercise you guys will need to do on your charts later on. First of all, point of reactions I'm marking. I'm marking points of reaction. The point of reaction can also be a point of failure. It all depends. That is it, guys. Now marking point of failure is the wicks. It does not matter if your chart is full of support and resistance, because by the time you finish the training, this is not how we mark the charts when we trade. I mark them very neatly, not so many lines. But remember, you need to grab this understanding, this concept. Without this understanding and concept, you cannot trade with charts where they are not even marked and you exactly know where they are. You understand what I said? You need to grab this concept, guys. So go into 4 hours, guys, and you will see the market is reacting from these points. Market will always react from these points. So do you guys understand how to mark support and resistance, straight lines, horizontals on your charts? Any questions? Say yes to me. If any questions, ask me now. The reasons why we mark point of reactions and point of failures, and the question which is the strongest, point of reaction is stronger, point of failure is second to the strong, why we mark them. No, you must know the reasons of them. Any questions? Any questions? Good. I'm going to show you we mark support and resistance in an uptrend or in a downtrend. In an uptrend, support and resistance is like this. In the downtrend, it is like this. Remember, you also heard about channels. You also heard about tunnels. They are not channels and tunnels, guys. These are support and resistance because they look like channels and tunnels. We also call them. That is a wrong concept and understanding. And this is a support and resistance in a straight trend, in no trend. Do you understand? There is no difference. Only we are marking support and resistance, support and resistance, support and resistance. Yes, these are support and resistance in an uptrend. These are support and resistance in a downtrend. I'm just marking my support and resistance. And this is support and resistance in a straight, no trend. Understand this. Very important to understand what I'm saying. Understand? Any questions? Okay. Now remember, guys, some concepts are very important, some concepts. Price, like fish moves in water, right? A fish cannot live without a water. Very important concept, right? Take a note of this. The bottom line, prime objective. This is the goal. What I'm saying to you, when the fish moves in water, she cannot move without water, right? Similarly, the price cannot live without support and resistance. It has to move within support and resistance. It cannot live without support and resistance. So the price always need a support on underneath its feet, resistance above the head, always, always, and that is always. Sometimes it will break a support or resistance. Let's say if it breaches a resistance, it will reestablish another resistance. It might take couple of minutes, couple of hours, but then it will always establish a resistance because it needs a resistance and support to breathe, to live within the market. Do you understand this concept? Say yes to me, guys. Good. Now I'm going to show you guys how to mark support and resistance on an uptrend, for instance. Guys, this is an uptrend, right? You call them trend lines, we call them trend lines. The reason we call them trend line is because we are marking lines on a trendy market. Which is a trendy? Uptrend or the downtrend. But remember, at the end of the day, they're support and resistance. They're not trend lines, they're not channels. They can also be classified as channels, tunnels, but remember, they are support and resistance. Now guys, remember this. This is where the price is. You need to capture the price. You need to capture the price. The concept is this: capture the price. Find a floor, a support, and find a ceiling on the head of the price. This is where the price is. All I am doing is to identify support and resistance, and all I like to do is make sure I capture the price between support and resistance, identify them. I marked, I did not mark this line. Try to understand. I marked I marked the point. After this, the price has never breached this. You see, the price has never breached this, right? So I marked the lowest point, the floor. The price has never gone beyond this. So I know exactly this is the floor in the rising trend. If the price comes down, this is where it wants to come. Understand this. Do you understand this? All you need to do is to connect 2 points. That is it, 2 points. If you connect 3 points, it's good. But 2 points is fine. Do you understand how I did it? Okay. Then look for the ceiling now. The resistance. I want to connect 2 points, right? That is it. Understand? The price has never gone above this. That is resistance, and never gone beyond below this. That is support, right? So we all we did is capture the price. And remember, when you capture the price in the trendy market, it will be something like this. In the down market, it will be something like this. Understand this? Any questions? Any questions? Establish, try to establish more if you can. 2 points, right? So find if this support is broken, where would be the next level? Try to establish 2 points and see if you can establish. I can establish using this and this, right? So this is the next target. The price breaks this, the price comes here. Yes? You understand this? All I am trying to do is to capture the price between support and resistance. That is it. That is it. No other thing. From all angles around, surrounding, just capture the price between support and resistance. So it is very simple, the price action. The price lives between support and resistance. Either the price will aim to test the resistance or to test the support, right? And if it breaks one or the other, it will try to aim for another level. If it reaches this support, this is the next support, and this support will act as a resistance. Do you guys understand this concept? Any questions so far? Let me mark more support and resistance for you. Rising market. This is the low support. Price has never gone beyond this point, right? So that is why I marked this. It tells me this is the low support level that the price can test, and price has never gone beyond this. So this is the level acting as support, resistance. Now trend line has to be drawn again. Remember, we are not drawing the trend lines. We are trying to capture the price within support and resistance. Don't confuse yourself. This is the misunderstanding everyone has. The trend lines has to be drawn on 4 hours, 1 hours, daily time frame. Guys, remember, when you see a bigger time frame, this is a zoom out. Let me take you to 4 hours. This is a zoom in. Can you not see this is a zoom in? So if I marked a line on a daily time frame, the levels will always remains the same. All I am doing by changing the time frame to zoom in and out. So you want to mark the trend lines on a time frame where you can see significant, the better picture. Which is the better picture, this or this? Obviously this, right? Do you understand? I will teach you exactly how to go into the time frame. That remember, at this stage, this is not how the question you should be asking. The question is, I am capturing the price between support and resistance, and exactly that is what you are doing right now. So don't confuse yourself. This is where the price is. This is where the price is. Let's capture the price. I captured the price from the top, right? I captured the price. So price has to reach this, go above. Yes, very simple. I capture the price on this. Automatically it will establish make a channel, because support and resistance in a rising trend is like a tunnel, like a channel. Yes. All I did is connect this point with this point, the highest. I could have connected with this point too. It is fine. But I wanted to connect highest point because the price has never gone above this. Let's say if I had connected from to this point, then price reached this point again. So I have to do another line like this as a reference, because if price breaks this, this is the next resistance. Do you understand, guys? Connect it to the last point, because after this there is nothing else. Not about point of failures. Remember, let me show you again. I had this point connected until the price has never gone beyond this resistance. But what happened here? The price breaks this resistance and came in. The price has gone beyond this point. So I have to mark the point, the last point where the price has gone, because resistance will be a place where the price has gone to the extent and never breached and never gone beyond. So now I will add another resistance. Now what it means is this: the price has to break this resistance and then this resistance. There are two resistance here. Understand that, guys? Sefil, do you understand what I'm saying? Sefil. Then what I do, because they are so close to each other, to keep my charts clean, I delete this. I don't need it. I need it if there is a difference between 35, 40 pips. If it is close by, I'll keep the clear one. Now the price is falling. Can you see? So I captured the price. Price has to break this resistance to go up. Very simple. Price has to break this to go up. Price has to break this to go down. Price cannot go back, right? If it would have gone back, we would also mark another line, but there's no point in marking because the price cannot go back. Also, price has to break above to go above, right? So remember this. What are the possibilities price has? Firstly, go to the downside, test the support level, or break it to the downside. Yes? Next possibility, the price breaks this. If the price breaks this resistance, then the price will aim for what? This resistance. Yes, if the price cannot break this, then the price will go to the downside. Makes sense. So we are capturing the price within support and resistance. Does it not make sense to you now? Look, the successful trader is he who can capture the price and predict the price movement and then open up trades. If you cannot predict the price movement, we cannot trade successfully. So all I am trying to do is to capture the price between support and resistance, to capture and precisely condensing its movements. And if I can condense its movements, it is easier for me to trade successfully because I know the price has very fewer options to move around. Yes or no? Say yes or no. Do you guys understand? So forget channels, forget tunnels. Yes, they look like channels and tunnels, but remember, at the end of the day, don't confuse yourself. That is where a lot of people fails in trading. This is all about capturing the price, and price is like a fish in the water. It cannot live without support and resistance. It has to break this resistance to go up this level. If it doesn't break this, it is going to test this support. It has to break this support to go to the downside. So I know my options because I know the price is stuck. It is easier for me to nail the price whilst trading. Make sense, guys? Any questions so far? Any questions? I'm yelling at you guys so that you can understand, because remember, your hard-earned money will be on stake when you'll be trading. It's not a joke, it's not a gambling. There's a difference. Michael, do you understand? Completely understand. My question is completely understand. Remember, the first two lecture is the essence because they are the primary analysis. The lecture 3 onwards are the secondary analysis. We trade. Number one focus will always be primary analysis. Secondary analysis are only to add on as a confirmations. That is it. Any questions so far, guys? Let me give you example. When the price was here, so what I did, this wasn't there when the price was here. I just marked my highest point. That is it. That is it. That's what I did. And I marked my low point when the price was here. Then the price breaches this and establish another support. Can you see? When it established another support, I marked my line to establish that support. Understand, guys? Now this support is acting as resistance. Once the price breaks above this, I knew that's now this is a support level and that is the next station. Understand? So it's stages by stages. So we break it into support and resistance and capture the price action. Understand, guys? Good. Now I'm going to go through certain concepts of support and resistance, guys. First, the straight lines. Support, price goes up in resistance, goes up in support. This is the price behavior which you always need to remember and understand. Then go from support to resistance again, then support. Then the price will break the support. But then this resistance is acting as, this support is acting as resistance now. And believe me, the price will take a little longer to establish a support level. And then hit this resistance and this support and this resistance. So do you understand? The price always moves in support and resistance, within support and resistance. Do you guys understand? Any questions? Any questions, guys? Good. Give me a minute. That is for the straight lines. So when the price established this, we marked another line as a support. Now let me give you example in a trendy market. How does it work? Same concept. Price rising. This is your support and that is your resistance, right? Right? Say yes. The price breaks your support, test the resistance. So what we do is, because price established the low point now, reaches this, we just put a reference on the low point as a support. You understand, Saifal, what I did? Because now this is a support and that is a resistance. Simple as, simple as. Just see a live example. This was before. When the price breaches this, this was next. Understand? Simple as. Do you understand? Simple. It breaches this, then this. Do you guys understand so far? Say yes, please. Any questions? Any questions? Okay. Now I'm going to give you another understanding and concept of when the rules of when the price breaks something, support or resistance, how it should be. Resistance to support, the price went up from support to resistance again, then from resistance to support. Price breaks it. We never take a trade. This is just a discussion. I'm not suggesting you take a trade just based on this, but remember, this is one of the factors you'll take a trade, prime analysis. The price breaks one of the levels, price breaks the support level. We do not take a trade on a breakout. It can be a false breakout. Why? The price can suddenly come back in. So let's say if the price breaks this support and you sell, the price comes back, you're done. So what you want to see is this: the price comes back and retest and fails. The price comes here and it fails. Then you will sell it. You understand? So what the retest mean? Retest mean the price established the previous resistance, previous support as a resistance. The price breaches the support and it established this previous support as a resistance, which is also called a retest. The price tests and fails to enter. Test and fails to enter. instance, price breaks this support, comes back. If it goes back in, it fails to establish this support as a resistance. If it holds at resistance, at this support, which is at this resistance, which is acting now as support, right? This is a retest. Then we take a trade. So we always take a trade on a retest. We always take a trade on a retest. We always take a trade on a retest. We never take a trade on a breakout. Remember, breakout can be a false breakout. Understand, guys? Understand this concept. Say yes to me, please. Very important, significant. Okay, good. Now, before I go on to give you the live examples of the possible trading opportunities using support and resistance, I want to ask you some questions. I'm opening up the unmute. I've unmuted you guys. Michael, you first. How long you've been trading, and tell me your trading experience so far.
Since about April or May time. Pretty much been alive most of the time. I done a few courses, done some of Ryan stuff from FIP. Varying success. Probably more recently, things seem to have started just going wrong. Can't seem to pick up where trades are. But since
The reason
your webinars have made sense with support and resistance lines.
Okay, the reason is problem is this, because you're not understanding the essence, the core of these concepts. Trust me, if you understand them exactly what they are, then you will be a successful trader. You'll know exactly where you went wrong. You understand? You
Yeah.
mark people
No,
on
it's
channel
making more
support and
sense.
resistance, but they do not understand the reality, what it means in essence, in originality. So you need to understand the
Yeah.
significance of it. And remember, once you understand, it's so easy to trade. Now tell me, do you understand the support and resistance which I've explained you today or not? Do you understand or not? Tell me.
Yeah, that makes much more sense.
Exactly. Will you be able to mark on your charts if I ask you to do it? Yes or no?
Yeah, yeah,
Good.
definitely.
I want to see this. I want to hear this because I need to know if you're getting this. Saiful, now your turn. How long you've been trading, and tell me, do you understand the concept of support and resistance in its entirety? Tell me.
Yeah, I've been trading since 3 years, and nobody has taught me support and resistance and retest and all that stuff like you have. So I've done a few courses, but nobody has, showed the concept of support and resistance at its core like the way you showed us. So this is awesome and very clear to understand, very simple to understand.
Okay, now see this. Retest. Retest is the word is made up for us retail people to understand. It is not a retest. Retest is the word for us lots to understand. It is not a retest. Remember, when the price breaks a certain level, it has to establish, let's say a price breaches a support, it has to establish the next support, right? Before it establish a next support, it has to declare the one it breaches as a resistance, right? Let me give you an example. Understand this. The price breaches this support. Before it establish another support here, it has to declare this support as a resistance. Declare it, it has to go and test and fails, which we call in our language a retest. A retest. And then it established the new support here. So the retest is the word for human retail traders. It is not original trading sense. You understand what I'm trying to say? You guys understand
Yeah.
what I'm trying to say? These are the terminologies for us lots to know, but that is not the case. Try understand what the price action is suggesting. To establish a new support, it has to declare the broken support as the resistance. How would it declare? It goes and fails. If it goes and enter into it, the support remains a support, right?
Yeah.
Okay, good.
Yeah.
Completely understand, guys, right? Keep the volume. I'm keeping the volume on. Any questions you can ask me, because I'm going to show you examples of possible areas of support and resistance where you can take trades. I'm not suggesting you're taking trade based on this, but this is one of the reasons when I'll enter into a lecture 2, it will make huge sense. See this. The price breaches this support, right? Breaches this. It went up and retest. Can you see this retest? It fails to enter into this, right?
Yeah.
On the retest, that is your support. I'm going to show you the rules later on to enter on the retest. What other confirmations you see? You see with the buyers controlling, sellers controlling, but that comes at a later stage, not at this stage. All I'm trying to show is a retest. So that is a retest. Now this resistance, this support is acting as a resistance. We sell it. It establish. We sell it. It established this as a support, right? It breaches, it goes back, retests, it fails, goes to the downside, right?
Yeah.
It breaches, gone up, retest, it fails, go to the downside again, gone up, fails, go to the downside again. Remember the price established this as a support again, right? So what you need to do is mark your reference. It breaches, retest, fails, go to the downside. Can you see? This established this as a support, right? That is it. That's how you do it. So does it make sense what I'm showing you guys?
Yeah.
Yes.
I'm in a sell trade on this pair. Let me show you why I'm on a sell trade based on this analysis, this teaching, support and resistance only. Look what I'm doing. Can you see what I'm trying to do?
Yeah.
Breaches, retest, my sell entry. Breaches, retest, my sell entry. Breaches, retest. Can you see this retest? It is failing to enter into this. What I'm expecting is this. Simple. Next target is first this. Support it establishes. Make sense, guys?
Yes.
I'm simply teaching you what exactly I'm doing in my trading every day. Understand? And remember, guys, there is another resistance. Now, before it was this, now it was this. The price has to break this to go to the upside. So as long as the price remains between this, I'm going to hold my trade. Simple. Because price has to break this to go to the upside. Without the break and a retest, I'm not going to close my sell trades. Understand, guys? Do you understand now what I'm saying?
Yes.
Yep.
Any questions, Michael and Saiful, on this?
No.
No.
I showed bare examples in my webinars on this, so you need to again go once after this lecture and watch my webinar. I'm going to send you the recording of this training session too. Okay, guys, for your understanding, you need to practice at least 50 charts marking support and resistance, and I want to see at least half of them before I take you to the next lecture. And the next lecture will be either end of the week or next weekend. Remember, I want to see you guys being frustrated, tired of marking support and resistance, and then I want to go to the next lecture, because this is the essence of trading. I want you to mark them blindly on your chart. This is how I want you to be in control of this. You understand this?
Yes.
Yeah.
Very good. Let me mark another chart for you to show you guys. GBP I'll show you on monthly time frame. It was very easy. First of all, can you see it breaches? It breaches the support. Retest, it fails, continue to the downside, right? Simple.
Yeah.
Simple. The question somebody can ask me, let me give you another example. The price breaches, retest, it fails on this candle, right? Fails to enter back. It established the support as a resistance now, went to the downside. Can you see this? Very simple, guys. Now this support has been breached. Now this is acting as a resistance. So if somebody asks me a question, where would the price, GBP can go to the upside straight away. Oh, I'm scared. Come on, guys. I need to see the break of this to confirm movement to the upside, first of all. You understand? Very simple.
Yeah.
Without this, all I'm expecting this. Or, so we have captured the price movement by using support and resistance because we knew that the price moves between support and resistance like fish moves in water. Do you guys understand the concepts? Do you understand? Tell me.
Yes.
Yeah.
Any questions?
Nope.
Let me give you example on gold. I've been trading this pair, guys. I have been in more than 550 pips. I marked this line when the price was here. You understand? Price was here. And I knew the price needs to break this to go up. But it hasn't. It hasn't, right?
Yeah.
This was the support. This was the support, right? When the price came here, so I'm using this. I know breaches this, test this, breaches this, go to the downside. But the price needs to break this to go up. So I never closed my sell trade yet. And what I'm expecting now, first point of reaction, the attraction will be this. Either can price change this resistance into a support by entering into this, or it retest, fails, and continue to the downside. Make sense, guys?
Yes.
Yes.
So now I want you to show me something like this when it comes to marking up your charts and your practice and training. Daily time frame. First of all, guys, you'll mark your point of reaction and point of failures, right? Quickly.
Mm.
This is one. Then you will mark on your daily and 4 hours time frame, two time frames. You will mark your support and resistance in an uptrend or in the downtrend, like this. I'm going to show you guys exactly. I'm marking this because this is important, because this price has breached this. The price can always come back. Then I'll go into 4 hours. I want to see if I could do something else. The price has to break this. Connecting 2 points only. The price has to break this to confirm an upside move. You understand this? Michael, you got it, what I said? Saiful, do you get
Yeah.
it, what I said?
Yeah.
Sure. So 4 hours and daily time frame, you'll show me. Simple. 4 hours and daily time frame I want to see.
Okay.
Let me show you another example from something. Let's do on this one. Point of reactions first. I'm just quickly doing it so guys you can do it on your own pace. Give it a proper time. Do not rush into it, right? Because I don't like marking charts every day. Then what I'll do is, first of all, this was the resistance. The price breaches this. That is my resistance. And now what I am looking at, very simple. The price has to break this to go up, right? 4 hours. It's very easy. Now this is what I do, like this. 2 points. The price has breached this and it's testing. Possibly if the price fails to go above this, then that is the next station. Understand, guys?
Yeah.
The price was falling down, right? Highest point you'll mark. You mark this point, then the price breaches here, you mark this point. When the price breaks this and a retest, that is where you start buying it. That is the buy trade. Understand this? Do you guys understand?
Yes.
The price breaches this, retest, that is your buy trade. It doesn't matter if it falls back again. I don't care. I want you to show me you understand the concept. This was acting as support. Remember, this is a support and resistance. Price is going up. One is support, one is resistance. Price breaches, retest fails. That is your entry, right?
Yeah.
To the downside. So I want you to show me your charts marking horizontal support and resistance, point of reaction, point of failures only on daily time frames. Then your support and resistance in ascending and descending channels on 4 hours, a daily time frame first, and then enter and go into 4 hours. And show me on the break, you'll take an entry by marking these blue boxes. So I want to see this exercise. I want to see this exercise on Euro US dollar and Euro yen. Euro US dollar and Euro yen. No, leave it. Australian US dollar, Australian US dollar and Euro yen. Yes, got it?
Yeah.
I'm gonna show you what. Can you see on my charts, guys? Guys, breaches, a retest, it fails. I'm in the short trade from here. Understand, guys? This is my, what is this? Resistance. The price breaks this. This is the next resistance. Or if it doesn't break this, it goes to the downside. Understand? Makes sense?
Yeah.
Exactly, that is how I am trading, but obviously there are other reasons. I'm giving you the concept that I've just taught you today, how I am implementing. That trade is with one lot only. I trade with one lot. Today I'm trading a couple of trades with 2 lots. Hopefully I'll have a good day. My daily target is 1K a day on my personal account in United Kingdom for my living expenses. That is it. My all business accounts are in Dubai with Duca Scoopy Bank because of the tax purposes, because there's no tax in Dubai. And my personal portfolio worth had crossed last week $900,000 US dollars. I began that with just $10,000 2 years ago, guys.
Wow.
Last week I had earned on my personal business accounts more than $110,000. And my personal taking last week was on my personal UK account. I trade with just one lot, guys. Was 24 to $26,000 was last week earnings. Normally, $27, yeah, 27,000. I send you the picture of that. But normally, I try to aim a grand every day. But normally, I try to aim a grand very relaxedly. Do not overtrade, and I end up making more money every day. So that is my personal. And I'm also trading accounts of few politicians, very huge accounts, far bigger than my personal accounts, and I take 30 profit out of them. I'm just trading their accounts because of my relationship with them for my social purposes, commercial purposes, nothing to do with the business. That's not my business. I don't like to trade for other people's. But yes, obviously, I'm trading those accounts for certain politicians in different countries, not of my country, different other countries. I was introduced to them just to build my relationship with them. So in case if I need something, I ring them and they do it for me straight away because they know I'm a money man for them. Understand, guys? Yeah. Any questions so far? So
how many?
Yeah, go on.
I have a question.
Yeah.
How many candles do you wait for a retest and then enter?
That will come later, my friend. That will come later.
Okay.
Right now, the thing you need to take out of this lecture is the retest means the price breaks it and come back, it fails to enter. That is it. This thing will come in the lecture too when we do candlesticks analysis.
Got it.
You need not to think about these sort of things at this stage. You'll get confused. You need to grasp the essence of these concepts, support and resistance. Understand? Today I show you how to mark support and resistance and spot entries. Spot entries, I did not say trigger buy and sell yet. But I will show you with candlesticks analysis when to trigger buy and sell, when to fire the bullet. Right now you put the bullet in the right direction. You know you have to hit in this direction, but to pull the trigger, you need a candlesticks analysis which tells you who's controlling the market. So if there is a break of the trend line and it fails and it retests, where you will pull the trigger when you see the sellers are in the market. Yes. How do you see this? I'll show you the candlestick analysis, which is totally a different way of trading. The way I do it is not a conventional way you read in your books, shooting stars, hammers, bullish engulfing. Not at all. I have a different way of showing you trading candlesticks analysis, which is Al Brooks, a famous writer, a famous price action trader. He wrote 3 books, very complicated books, guys, but I got to grip the concepts and understanding. So that is why I control my trading. Believe me, after lecture 2, you will guys will be laughing. You will be laughing after lecture 2, trust me. And after lecture 3, you will be trading.
Awesome.
Any questions, guys? And tell me, do you enjoy the lecture? Does it not help you understand the essence of support and resistance?
Yeah, much
Yeah.
different from the other people.
And much clearer. The price movements make much more sense now.
Look, Michael, the bottom line is this. We have to capture the price. It's like a mouse. It's like a mouse
Yeah.
running here and there, or a fish in the water. Remember, to
Mhm.
capture the price, we need. How do you capture the mouse or a price? A fish. You precisely find the ways, areas where it can go, right? And then just guard those areas with traps, right? And that is it. And by support and resistance, exactly that what we are doing on our charts, right? So the whole purpose of these lines, support and resistance, is to capture the price. If they are not there for that purpose, and no matter how many support and resistance and channels you have on your charts, it makes no sense. It is useless.
Mhm.
And exactly that's what's happening with the people on a lot of traders. Understand?
Yeah,
Yes.
I've seen people only drawing horizontal support and resistance, not like this.
No, they do this. They do this horizontal and vertical, both of them. They do it, all of it. But the problem is they don't understand the concept. Remember, this is not enough. The price can break it, price can retest, and then come back again inside. So then what? A guy sent me a message saying, I watched your video, I'm trading very profitably for a couple of weeks, and suddenly I had a loss, 4 trades in loss. I said, what happened? He said, the price breaks the support and resistance, it retests, and then it falls back again. Yes, it can. It can. It does not mean it will go up to the upside. You don't take a trade just based on a break of support and resistance. You need to see who's controlling the market, so sellers, buyers. When the sellers, if the buyers are controlling, when they are exhausted, when sellers came into it, who's controlling weak holders, strong holders, all these things which are price action. You can just not just trade the support and resistance. Support and resistance gives you a directional idea where the market is going to go. Make sense?
Yeah.
I mean, it tells you which street the market is on, and you know exactly either side of the street, and all you need to wait and see either the buyers are pushing on right or the sellers on the left. That is it. How do we identify buyers and sellers? It's lecture 2. Believe me, my lecture 2 will blow your minds. Any questions, guys? Any questions? I want to 100% make sure you guys understand the concept so that I can end this session, and then you need to do the homework tomorrow. I want to see 2 charts marked up, Australian US dollar and Euro yen. Understand, guys?
Yes.
Yeah.
No problem.
I want to see support and resistance, horizontal and then vertical. Horizontal on daily time frame, vertical on daily and 4 hours, and then you will mark with the shaded box on the breaks and retest possible entries, directional change. Understand, guys?
Yeah.
Great, guys. Hope you enjoy the webinar, and any feedback and comments you can give it to me on in the group or on my Skype, right?
Yeah.
Great.
Sure.
Yeah.
Tomorrow, I want you
Thank
guys
you.
to send me the homework on my Skype. I'll check and send it back to you again. If I feel that you guys are not doing correctly, I will have another training session on the same topic again. I will not move to lecture 2 unless I'm unsure, I'm dead sure that you guys blindly implement these concepts. Understand?
Okay. Yeah.
Yes.
Great. I look forward to your feedback. Take care and have a very good night.
You
Great.
too.
Thank you.
I'll send you the video of this